Let me bring on board Pradeep Kheruka, who's the Executive Chairman at Borosil Renewables, to talk to us about how the business is shaping up. Mr. Kheruka, it's always a pleasure speaking to you. Let me first start off by trying to understand how the capex plan is progressing. End of calendar year 2026 is when some of the new capacities were expected to come on stream. Are we on course for that? Is there going to be some capacity ramp up along the way prior to December?
We are on course for the lighting up of the furnace by December of this year, and hopefully seeing production in the first quarter of next year. As far as the question of additional capacity during the current year is concerned, we operate in a sort of a situation where we have a furnace and we manufacture glass from the furnace. We are already at 100%. We are manufacturing 100% of the furnace capacity, and we're selling 100% of our production. We typically have no stock left at the end of the month in our warehouses. So we are going as good as we can, and the demand in the country continues to be very strong. We continue to keep on achieving new goals in terms of the production, which is being the modules which are being installed. So we have the government is meeting its installation targets. Everything is frankly going on course. Incidentally, I just came to know that India has the second largest program already in place for expansion of transmission capacity. So our transmission capacity is being increased in the country. So when we have new installations, it can be evacuated. It will continue to go. So things are looking good.
Understood. And what's the China factor playing out in terms of pricing? Are you well insulated from that perspective as well? Because you've got such a large 600 TPD coming on stream. You're clearly suggesting that demand is enough. In fact, you're on 100% capacity utilization. But the only possible disruption, Mr. Kheruka, is the China factor. How comfortable are you?
Well, you see, we still haven't been able to acquire the capability of actually looking into the future. We can only project our thoughts and imaginations. As things go, the anti-dumping duty is solidly in place until 2029. And so therefore, as far as China is concerned, direct imports from China will remain subject to the anti-dumping duty. Mind you, a lot of glass is coming from China even now, because the demand for glass is greater in India than its production capacity as on date. It takes time for us to ramp up production, which is of course happening, and we do expect by March 27 and by March 28 we expect to see a good amount of Indian production capacity on the market, and hopefully achieving nearly self-sufficiency. So, but on the other side, the sense I'm getting now is that India is emerging to be a hot destination for setting up of for setting up of data centers. And the data centers, from what I hear, in the United States, the electricity grid is at full, and they don't have any plan, or they don't have anything launched for a very high new capacity for power transmission. And therefore, India remains as a place which would be the ideal destination for people who want to set up data centers. So with that, I see there is absolutely no let-up in demand for solar power. Solar power is going to continue to grow. At this moment, I cannot see where the limits are and when the time is going to come when solar power demand is going to start tapering off. So for this time, I think everybody is focused on doing the most he can.
So Mr. Kheruka, well placed in terms of competition is what I gather. You've got 600 tons per day, which you're likely going to be adding in December. which comes on stream, I believe, FY28 only. Does that, in a linear fashion, straight away get you a 60% higher top line? Is that the way to look at it in terms of impact?
Yeah, unless something else happens, that is the way to look at it. There's a little correction on the timeline. I would say that by FY27, we should be seeing at least one of the furnaces coming up in full production. The second one also would be already in production by March of 27. And the first quarter of 27-28 should see us having full production.
Very
so
quickly,
the full 1,600 tons should be on stream in the first quarter of 27-28.
Understood. And Mr. Kheruka, very quickly, what should the margin picture look like? Should it be 20% plus?
Our EBITDA in the last month, in the last quarter, which we, in the results that we published, was a little over 32%. It was actually, I think, 33% of revenue. And so it's, as I said, you see, there are glass plants coming up elsewhere. There's one plant coming up in Indonesia. There's one plant coming up in the UAE. When it comes up is a question. And when they achieve the right quality of production is a second question. After they have achieved it, their glass has to be used by module makers. They have to be submitted to the Central Electricity Regulation Authority and certified. All of this takes several months. And in the meantime, what the government is able to do to help keeping us away from competition, which is essentially competition through a third country. It's essentially Chinese company, 100% owned Chinese company, which is coming up and which is hitting us. So the government is alert to that, and we will have to see what they come up with, because based on the government's clear understanding, assurances to the industry, we are having up to 50 gigawatts of solar glass capacity coming up in India. So that's going to be tens of thousands of crores in terms of investment. And the government is definitely going to be very aware about that and doing whatever they need to do.
Thank you so much, Mr. Kheruka, for coming in and speaking with us. Always great chatting.
Thank you.